Global markets showed a mixed but broadly risk-positive tone on Thursday, with US stock futures pointing higher as investors look to recover from a sharp Fed-driven sell-off, while oil prices extended losses after the US and Iran signed an interim agreement aimed at ending their conflict. In pre-market trade, contracts tied to the nasdaq 100 jumped around 1.5%, signaling a potential rebound after Wednesday's decline. S&P 500 futures also gained, while Dow futures edged higher as traders rotated back into technology and chip stock. Investor sentiment has been shaken by the Federal Reserve's latest policy stance, which signaled a stronger than expected tilt toward future rate hikes. Market pricing now shows a significantly higher probability of an increase this year, with traders adjusting expectations following the central bank's updated outlook. Despite the policy uncertainty, buying interest remained concentrated in tech and semiconductor names, with chip makers leading early gains. The sector continued to attract demand and optimism around artificial intelligence-related growth, helping lift broader risk appetite. In Asia, markets closed mostly higher, with Japan's Nikkei at 225 and South Korea's Kospi hitting fresh record levels. However, Hong Kong and Australian equities ended lower, reflecting uneven regional sentiment. European markets were also slightly weaker as investors weighed growth concerns against tightening financial conditions. In commodities, oil prices fell further after the US-Iran interim agreement, which is expected to ease tensions, reopen the Strait of Hormuz, and improve supply flows. The decline has also helped push US gasoline prices below $4 per gallon for the first time since April, offering relief to consumers. In currency and policy developments, the Federal Reserve has held rates steady but signaled possible hikes ahead, while the Bank of England also opted to keep interest rates unchanged as policymakers assess inflation risks linked to global uncertainty. In Pakistan, the positive momentum continued, with the benchmark KSE 100 index extending gains for a third consecutive session. The index closed higher, supported by strong participation and broad-based buying across key sectors. Market activity remained robust, with trading volumes holding steady despite mixed global cues. Overall, markets are being driven by a tug-of-war between easing energy prices following geopolitical de-escalation and rising expectations of tighter monetary policy from major central banks, with equities attempting a cautious rebound while volatility remains elevated.